Hi, my name's Tim from Timothy James & Partners. The objective of today on the 29th of April during coronavirus is to talk to you about what's happened to the value of the stock market, your pensions, your savings and your investments, and also some tips for the self-employed on financial planning during lockdown. And this is what our office looks like on lockdown. Empty. We are normally 85 people and the office is buzzing, but they are all working from home, and in fact we have 2 people that come in twice a week just to do the post without using any public transport. So we are making the video during coronavirus lockdown. Steve, who is filming, is always 2 meters away. I set Timothy James & Partners up in 1995, and I think what makes us different to other independent financial advisors at that time and probably today is that none of the consultants earn commission or bonuses. Everybody's fully qualified and have a flat salary. We only accept work by referral, so we spend a lot of time working alongside your accountants and your lawyers, and we specialise in working with self-employed business owners in the main, and also people who are of independent means. So why don't we go and talk to some of the consultants and see what they think that our clients can do during the current coronavirus. Do you have any financial planning tips for self-employed people currently who are working from home?
Yeah, so a lot of clients that I'm speaking to are looking at expenditure, something that we do annually with clients, and looking to try and cut back where they can on certain areas. We've helped clients with mortgage holidays or payment holidays on their mortgages. We're looking at the premiums they're paying, so we're going through bank statements and seeing if there are ways to cut back on what they're spending money on. We're looking also to see whether we can suspend or stop payments to their investments and certainly pensions for the time being to help with their monthly outgoings and expenditure.
And in terms of putting investments, savings on holiday, is that possible?
Mm-hmm. Even the banks, actually, the banks have, or most banks certainly, are allowing people to access even fixed rate savings accounts without any penalties. So you can actually, say you had a bank account where the money was kind of tied up for a year, the bank is now allowing you to access that money without any penalties, which is great. The banks are also offering the first £500 of your overdraft interest free. You can also have mortgage payment holidays, credit cards, loans, car finance are all offering payment holidays. So the interest still accrues, but it might just help with cash flow over the short term.
There probably is more time right now where the work isn't there in the short term to have a spring clean and to have a look at all of those payments that you've got, to have a look at your direct debits. Where are they going? What money are you spending? Where are you spending it? And where particularly we can help at Timothy James & Partners is to help you analyse that. And we can look at your mortgages to make sure that you're not overpaying on your mortgages. Now, clearly the housing market's come to a standstill, but if you have mortgages at the moment, just to make sure you're paying the best rate possible.
Most lenders are offering mortgage payment holidays, which is important to actually mention that it's a deferment of their payment. So it's not actually a holiday, you get it for free and that's it. We can help point in the right direction of how they apply for that. Most lenders have now started to produce online forms, so they don't have to wait on the phone for an hour.
And what about interest only versus capital and interest?
Yeah, so the other option that lenders have started to provide is if you're on a capital and interest mortgage, rather than a payment holiday or an addition to, you can also change your mortgage to interest only for 12 months, okay, which in some circumstances would work better than a 3-month holiday.
Are there any problems doing mortgage applications to get a cheaper deal?
Currently there are no on-site valuations, which when your property has some character or some charm, you would like a surveyor to come round and value it. Thus, that's not happening at the moment. So if your property is over £1 million, you cannot get it valued, which is hindering equity release it's hindering remortgages. If you have a product transfer, we may be able to help.
Lots of people may have fallen onto standard variable interest rates. What are the best rates available today to help reduce my monthly outgoings?
Yeah, that's one of the first areas we look at because it's very straightforward and very easy. With interest rates as low as they currently are, rates are very, very competitive. That's probably the only bit of good news at the current time with regard to financial planning and people's finances. So certainly, we can look at fixing rates or even arranging even offset type mortgages where clients perhaps can use that to help save interest on a monthly basis. Certainly rates of 1.29, 1.49, those sorts of levels are very possible.
We do a high percentage of offset mortgages. It does seem to work well for some of the clients that we have in terms of not perhaps needing all of the money up front or having spare cash that they want to offset against their mortgage.
How does it actually work? How does offset work?
So offset works in the way that, so probably a good example is Scottish Widows or Barclays, who tend to do a lot of those products. You'll have a separate mortgage account and an offset current account or savings account. So if you had, for example, a mortgage of 100,000 over here and you've got £50,000 worth of cash that you put into your offset account, you will only pay interest on 50,000 of the mortgage. If it's a capital and interest offset, that would be slightly different. So you still have to pay the capital element of the mortgage payment. It's only the interest that you save. So it does tend to work better on a monthly basis, interest only.
In the current environment, is it a good idea to start looking at drawing my pension scheme, and am I able to borrow from it?
We have found clients have accumulated 4, 5, maybe 6 small pension pots over the entirety of their working life. And it may be a good time to have a spring clean and to consolidate and accumulate your pension pots into one pot. Firstly, to have one set of charges, to have one investment strategy, but also if you are a director of the company, there you have the ability to loan 50% of your small self-administered pension scheme to your limited company. If you have a problem with your 3 to 6 month outlook and cash flow, it may be a short-term solution, especially if you have a positive 3 to 5 to 10 year outlook where you're confident that the coronavirus has had a short-term impact and there really isn't an inherent problem with your company.
So I can draw pensions from age 55. Is now time to start drawing on my pension scheme?
I think the answer to that is a necessity. You usually have 25% tax-free cash, which doesn't have to be taken as a lump sum, and thus you can take that tax-free cash phased over a period of time. So if you require a short-term cash flow help, then that may be an option. However, you can loan 50% of your pension scheme to your company and utilise that, having to pay it back over the next 5 years.
So that's it. If you want any more information, please give us a call or go to our website at Timothy Jameson Partners.